if China throws out the Communist Party, or the Communist Party adopts a system which is more democratic and open and allows a more capitalist society, then watch out the US. The US will be in trouble as a leader. China will become a leader.
Hello everyone, welcome back to Nomad Capitalist live from Kuala Lumpur, Malaysia, fantastic city. This is Javier Correa, the tax terminator, and I'm joined today by legendary investor, the Indiana Jones of the investment world, Mr. Mark Mobius. Pleasure to have you here, sir. So we're here in the beautiful Kuala Lumpur. Is this your first time in Malaysia?
Oh no, I've been here maybe 20 years visiting this country. It's been incredible.
Fantastic. Yeah. No, actually, yeah, you did mention that you've been in Asia for a very long time, your focus on this. So for those of you who are maybe watching at home and do not know, Mr. Mobius has been involved in several investment ventures across Asia and the world. And the Indiana Jones title comes from the fact that you've invested in some pretty wild places.
That's for sure.
Yeah. So for the folks back home that are maybe starting off in this journey, the younger folks, can you just talk a little bit about yourself, how you started off in this region, everything briefly, and then we talk a little bit about, more specific experiences.
Well, in 1987, John Templeton said they were going to start an emerging markets fund. At that time, I was living in Taiwan, having a wonderful time running the Taiwan ROC Fund, which was the first listed country Taiwan fund. And I got this call and I thought, God, this sounds interesting. It's going to be a global fund. Little did I know the difficulty we were going to have in getting into these countries. But I accepted, and we raised $100 million, which was a lot of money at that time because there were very few countries in which we could invest. Most of the countries in Latin America were either socialist or dictatorships. And it was true in Africa and, of course, Iron Curtain, forget about Eastern Europe.
The world was a smaller place back then for investments.
Yes, exactly. It was much smaller. But anyway, I started with a very small office in Hong Kong with two Chinese analysts who were with me 30 years later when I left.
Wow. Congratulations. Not very many companies can say that. Yeah.
So then we built it up and we ended up, as the emerging markets took off, we ended up with $40 billion under management.
From 100 million to 40 billion. That's quite an achievement. Congratulations.
Incredible. Thank you. And I was flying around the world and I was writing books and of course, but then the Chinese market crashed and things started going south. And we saw the S&P outperforming the emerging countries.
Mm-hmm. Yes, I remember this. And there was an inflow of capital back into the developed world, particularly the US, to a lesser extent Europe, but I think the US really captured most of it. That's very interesting. And so you mentioned Latin America and you mentioned Africa as well. In this wonderful trajectory where you took your $100 million fund and turned it into a $40 billion fund, were you mainly Asia focused, exclusively Asia focused, or did you end up putting some money in LATAM global. And also Africa?
It was global. It was not one fund. It was a multitude of funds. We had something like 60 funds and we had a Latin American fund. So we were invested in Mexico, in Colombia, in Venezuela for a time, Brazil, Chile, Argentina, Ecuador, once in a while Peru, some a little bit, but we were all over, yeah.
That's very interesting. Now that you talk about Latin America, I really think when you mentioned off camera, because for obviously a lot of our audience, that I am Venezuelan and I grew up in the middle of, the socialist catastrophe that underwent Venezuela. But you mentioned that you were there right before, basically it got really, really bad. And so I really think this showcases how the Indiana Jones element plays into it. Can you tell us a little bit about that experience? You were invested in a particular company, you sold right at the very last moment. How did that play out?
Well, we had visited Venezuela a number of times, talked to a number of companies, and we finally invested in the electric company of Caracas.
Electricidad
de Caracas. And things were going well, and there was I can't remember the name of the entrepreneur, another entrepreneur there who had a soft drink business, a number of different businesses.
Maybe it was the Machado family, maybe.
Yeah, I think so.
Yeah.
I think the company, that family. But anyway, then Chavez came in and said, we're going to nationalize companies.
I imagine all the alarm bells are coming in.
And I told my guys, let's get out of here. And luckily, AES from the US came in and bought our shares in Electricidad de Caracas. Mm-hmm. So we were able to get out, but I hated to get out because I loved visiting Venezuela. It's such a beautiful country.
We'd love to have you back one day.
I'd love to come
You know,
back.
maybe there's room for it in a frontier market investment fund. Very high risk, very high reward type scenario. That's interesting. And so that was your last position in Venezuela.
Exactly.
Okay. So you've exited, haven't been back from an investment perspective, or even personally in, I guess, the last couple of decades.
Exactly. Yeah.
All right. Understood. And so risks like these are very interesting in emerging markets because, to your earlier point, emerging markets up until very recently were overall dominated by dictators, warlords. The rule of law is relatively weak. You don't have the same institutions as you would in, like, say, the US or Switzerland, right? So
exactly.
How do you manage these levels of risks? Like, for example, if you have a young guy today who wants to follow in your footsteps, who wants to invest in a place like, maybe Venezuela is too extreme, but maybe Mexico or someplace in Africa, like, how do you measure these legal risks and how do you take them into account when adjusting for your investment strategy?
Well, what we do is when you look at a company, whether it be Mexico, whether it be South Africa or Turkey, we ask the question, what impact does the government have on this company? What could the government do that could risk this company with create a risk situation? And usually we'll stay away if there is that problem. For example, recently we've been looking at a company, an oil and gas company in China. And we thought to ourselves, numbers will look very good, but the government could make some changes that could have an impact.
Right. The people in power are maybe too involved, too aware of that company.
Or there may be some justification for lower oil prices, for example, where they say, look, you can't charge more than this or that. So that's what we look at very, very carefully. Look at the government risk that's inherent in any business that we may be going into.
That's interesting. And allow me to ask you this. As we see more and more regulations in the developed world, because I will say, me personally, I still have more faith in Western institutions than maybe in the global South. I do think the West still has an advantage there. But I will say that sometimes it's a double-edged sword because these stronger institutions can sometimes impose some very crushing regulations on new businesses that even drive them out of business or create artificial oligopolies, right? So
exactly.
Now, because we live in such a highly regulated environment where you have OFAC and SEC and this and that, and like I'm very US centered, so I look at these US examples. Is this like also a metric that you take into consideration when you look at Western companies as well, in your
definitely.
opinion?
Anywhere we are in the world, we look at these factors.
Okay.
A lot of people don't realize that they say, emerging markets are risky. US is risky. Think of the scandals. Think of the bankruptcies that have taken place
Bank
in the
failures.
US. Bank failures.
I remember I was in New York when Lehman went under, for example, back in 2008. Yeah.
I mean, you're talking billions, not talking millions, you're talking billions of dollars. So there's risk everywhere you go. So you've got to be aware of that and take that into consideration. We look at it very carefully. But you can never escape completely because, as I said, I gave an example recently about one NBB here in Malaysia. Mm-hmm. Billions of dollars out the window from a pension fund.
Of course.
Going into the pockets of politicians.
Mm-hmm.
No one was aware of that.
So ultimately, whether you are in New York or Caracas or Moscow or Zurich, it comes down to the fundamentals. Is this company operating properly? Does it have the right underlying numbers? And then ultimately, how does it interact with its regulators, with the people in power? Whether they be democratically, quasi-democratically, or not democratically elected, it's still the government.
Exactly.
Okay.
And that's the reason why you'll see companies betting about both sides. Mm-hmm. They'll give money to the Democrats and to the Republicans
of course.
Because they realize they need this contact, they need this influence.
Of course, yeah, and especially when you're looking at these regulated sectors like energy, banking, where really, if you're not to an extent linked to the government, it's impossible to do business.
Exactly.
Like maybe I'd say that the advantage of the West, and tell me if you agree, is that maybe if you're in Switzerland or the US or Canada, maybe if you have a mom and pop hardware shop, okay, fine. Maybe you can get by without having a major government contact, which is not the case in places like Venezuela, for example, where you would need that contact for everything.
Yeah.
But in the US, if you're big business, if you're big tech, if you're big finance, you need to be aware of what's going on in Washington.
Oh, definitely. You got to influence Washington as well. Mm-hmm. The difference, I think, to some degree of the US and Europe is the rule of law.
Okay.
Is more powerful.
In the United States or in Europe?
US and Europe. Generally speaking, you can be heard. You can. The rule of law will predominate at the end of the day.
Right.
Whereas in some of these other countries, that's not the case.
It's more of an influence issue, like who's more powerful.
Exactly.
Okay, I got it. And have you, in your opinion, because you've been around the block a few times, I mean, you've been doing this for years and your experience and wisdom is obviously very valuable. Do you feel that the rule of law has been, to an extent, weakened in the developed world? Because I have spoken to certain people that say, listen, it still works. Obviously, Miami or Zurich is not Caracas. We're clear on that. But it's not the U.S. of the Reagan era. It's not the U.S. of, back in the golden days of post-World War II economic growth and stability. Would you say that is
Definitely, yes. The rule of law has been weakened. You can see that every day in the press. You can see how people have been losing cases for one reason or another. They don't have the money to
litigate.
To hire lawyers.
Of course.
So that's a real problem.
Yeah, that's actually interesting because in the U.S. sometimes they say it's not a matter of whether the system works or not, but if you can afford the system.
Afford it, exactly.
Yeah, because obviously, lawyers are expensive. Of course, you have contingency fee attorneys, but then there's time, there's effort, and ultimately a lot of people just end up settling their cases, even in under unfavorable terms, just to get it out of the way.
To get it out of the way, exactly.
Yeah, exactly.
And think of how many people on death row who are innocent.
Oh my God, yes. That is very delicate. And a lot of corporate fraud cases too, for example, or malpractice. Okay, that's very interesting. And now that we're really zooming in on the US and how, government maybe influence has grown, because we talked about regulation, we've talked about the rule of law being, weakened to an extent. One of the things that I found interesting was that you mentioned gold a lot. You had a great, fantastic talk here at Nomad Capitalist Live just a few minutes ago. And I happen to be a gold bug myself. Obviously, I've lived through the worst inflationary period in modern history. I mean, only people who remember Weimar Germany basically can relate to me, or Zimbabwe.
Yeah.
And one of the things that I always tell people, both in my personal circle and professionally, is that what saved me and what makes me really an exception within the overall story of Venezuela is that my mother was able to get our assets into US dollars, into Swiss francs, and into gold. And so I have this notion of, hey, I know what it looks like for a currency to collapse. And sometimes I feel nervous because I look at what the Federal Reserve is doing. So I come at this from the legal perspective, not so much the investment perspective, but I look at, monetary mass increasing. I look at inflation that starts becoming a worry, and I'm like, hey, this reminds me of early days in Venezuela.
Exactly.
And I see people exiting the US dollar, exiting the Swiss franc, which have been traditionally safe havens, and pouring into gold, silver, to a lesser extent, Bitcoin for the younger guys maybe. So what are your thoughts on that?
Yeah, that's a very good point. And the young people are now beginning to wake up to the reality that these currencies never hold their value because the Fed keeps on printing.
Yes.
And a good example, during COVID, they went overboard. I mean, incredible increase in money supply. Any increase in money supply means inflation is coming down the road in less than a year.
100%.
And that's what we're seeing. And the young people, it's amazing. They've woken up to this.
Really, you think Gen Z is more aware, or millennials are more aware?
Which is why they've been buying Bitcoin. Because they believe that Bitcoin is a way to beat inflation.
Kind of like a digital gold.
They've been right up to now.
Yeah.
Even though I don't believe in Bitcoin, I believe in gold. But it's interesting, they compare Bitcoin to gold.
Yeah. Well, to be fair, gold does have a 5,000-year trajectory. Bitcoin has been around for barely almost 20, going on 20 almost, because first Bitcoin was back in 2009. So, I mean, you do have a couple of thousand years of precedent on your side.
Exactly.
We'll see if Bitcoin can withstand the test of time. But yeah, no, that's interesting. And how do you think, as quote unquote an insider, because obviously you manage large amounts of capital, you doubtless have access to people that really move the world of finance. Would you say that this is a general concern that top investors, top corporations are sharing around the world? This fear that the US dollar, the euro, the franc are not going to withstand the test of time like gold would, for example?
I think these companies are not focusing so much on that, but on ensuring that they beat inflation.
Okay.
So they make sure that they can raise their prices above inflation rates so they can keep up, because they know that inflation is going to be here. I mean, you're not talking about 3% inflation. You're talking about 20, 30% inflation.
And this is in US dollars. This is not the
US
Bolivar. This is not some currency in Africa.
Exactly.
This is US dollars.
Exactly.
Okay.
So that's the real problem.
Right.
And that's what they're focusing on more than buying gold or something like that. They're focusing on pricing that will enable them to beat the devaluation of the currency.
Yeah. Unfortunately.
And of course, a lot of them, they have earnings in other currencies. They usually will come back to US dollars. because U.S. dollar now is predominant.
Now, we'll touch about that in a sec, whether it will be predominant or not in a
That's
couple of
great
years. That's a very interesting topic to touch upon. But one last thing regarding inflation is that, for example, obviously, I know that story, as I mentioned before, all too well. And obviously, for a time, the business owners, maybe that independent lawyer, that doctor, sure, they can raise their prices. But ultimately, the problem comes down to when the typical person, that typical middle-class person, can't keep up. Because obviously, they're earning wages. They can't set their prices independently as much as a professional or a corporation can. So obviously, traditionally what we've seen is North America in particular had, the American dream, that, middle class life in the suburbs with the white picket fence, the 2 trash cans, the dogs, the 2 cars, and the family of 4. That was the promise of America. I still think it's there. The core values I still think are there. But as people find it more difficult to afford the American dream, do you see difficulties? Because these corporations, they can raise their prices. But if that consumer market, that middle-class consumer market shrinks, like I saw it in Venezuela shrink, ultimately these corporations will also be severely weakened down the line.
Exactly. And this is what Trump has addressed. Trump is addressing that issue. This middle class have been squeezed. And I think he may be able to do some reversal of that trend. Get money back in, because it's about jobs.
It's about jobs.
It's about jobs. If you can get them into jobs, well-paying jobs, then you can really help them a lot. But there's another aspect to this which I covered. I have a book called The Inflation Myth and the Wonderful World of Deflation.
Okay.
And that is the impact of technology.
Interesting.
You must remember that, what technology is doing today is making things so much cheaper.
Of course.
Now, you look at AI now. I don't have to hire an analyst. I can go into AI and get all this information.
Or maybe you hire 2 guys that work closely with you, but you no longer need a team of 20.
Exactly. So that's one example of the kind of thing that's happened. Things are getting cheaper.
But then there are less jobs for humans. So it's like increase in productivity, but ultimately less opportunity. Do you think that's a paradox?
No, well, what will happen, these people will transition into other roles.
Kind of like creative destruction kind of thing.
Fixing the air conditioner of the big units that have
of the warehouses where they have the servers for the AI.
Yeah,
I mean, ultimately, we've seen this transition many times. Like we were an agrarian society, then the farmers became factory workers and then office workers. And now it's like everyone has to be very knowledge-based and a handful of trades survive here and there.
Exactly, yeah.
But now you touched upon a very interesting point, and I want to tie it to the earlier point about the dollar and will it be prevalent in the next couple of years. So you said Trump is addressing this. So what is your overall outlook for the U.S., let's say in the next 20 years? Because you've spent time in China. China, for at least my lifetime, has been recognized as the main rival to the U.S. Personally, I don't see China really taking over as the dominant world power. I don't see the fundamentals. I think the U.S. still has stronger fundamentals than China overall. But obviously, I have seen the U.S. weaken over the course of my lifetime. So what is your overall outlook on the U.S. dollar and the impact of maybe, Trump's policies now? Do you think the American middle class could see a comeback and with it the U.S. dollar? I mean, how do you see it? And in the middle of this inflationary environment, can people really trust the U.S. dollar moving forward, or does it become more like the least bad scenario, so to speak?
Yeah. Well, first of all, I believe the U.S. dollar will remain the medium of exchange globally.
Okay.
No other currency will be able to equal that. But a lot depends on the degree to which they can get this inflation and money supply growth under control.
Okay.
If the Fed can be weakened to the extent that they reduce the increase in money supply, which, by the way, they're doing, then you can see the dollar getting stronger against other currencies.
Okay.
You must see, by the way, some countries are getting stronger against the dollar, but some are getting weaker as well. So it's not a universal situation. But the key factor now is what China is going to do and what India is going to do.
Okay.
Because if China throws out the Communist Party or weakens the Communist Party, or the Communist Party adopts a system which is more democratic and open and allows a really a more capitalist society, then watch out the U.S. The U.S. will be in trouble as a leader. China will become a leader.
Okay.
A global leader.
So it's in the U.S.'s interest for China to remain closed, to remain as communist as possible.
Exactly. better keep them communists.
And how do you see demographics playing into that? Because, for example, one of the main things that I look into when I try to, in a very junior level, obviously, versus to somebody like yourself, to look at the economic future of the world, I'm like, okay, the entire world, basically, with a handful of exceptions, has birth rates that are below replacement. And I see China, that's a huge issue. I see the one-child policy having catastrophic results. And what I see is, sure, you have a massive labor force, a massive consumer market that didn't really develop to its fullest extent. And now that population is getting quite old. And so what you're going to have is a massive generation of people that are retired, essentially. Whereas in the US, you have healthier birth rates, albeit not replacement, but for a really long time, immigration has offset that. So foreign talent coming into the US and people coming in, and where there are young people, there's more innovation, like there is more entrepreneurship, more dynamism. And that's why, ultimately, I don't know, even if China opens up, can they really reverse this demographic trend?
Well, yes, it's an older population. As I mentioned, the average age is higher than India, for example, 30-something. You must remember that China is not yet a consumer society. It's an export-led economy. If they can reverse that and make it like the US, a consumer-led economy, then you can see incredible growth, incredible wealth being created, because they have the infrastructure. If you've been to China recently, the infrastructure is there. Now all they got to do is convert into a consumer economy. Then it's going to be incredible.
Watch out the US.
It'd be incredible. And of course, what will happen is that will attract people coming in as well.
Of course.
But you must remember, there are large swaths of the population in China have not had access to consumer goods to the degree that which you see in Shanghai or Shenzhen or Beijing. There are lots of people that are not up to that level by a long shot. So there's a big disparity.
Right, so there's a lot of room to grow.
A lot of room for growth.
Versus in the US, the growth basically already happened.
Exactly.
Okay,
Exactly.
Interesting. Okay, and when you look at, for example, gold in particular, you mentioned in your presentation India. You mentioned that the Indians are very bullish on gold, that they're very strong on gold. How do you think that impacts the gold market moving forward? Are the Indians right? Are they seeing something that maybe other big countries are not seeing? What are your thoughts?
Well, traditionally, Indians like gold. I mean, if you have a wedding, you've got to have gold for the dowry. So that's a huge, huge demand. But you must remember, China is also a big consumer and producer of gold. I think China is one of the largest producers of gold in the world. But they also consume. They're buying more and more gold. So you have these two societies, billion people, 800 million plus.
Huge markets.
Consuming a huge market. And gold is a currency. Gold is a currency. So the degree to which any country adopts the gold standard again will be in a very strong position. And it's quite possible that the Chinese might do that.
Adopting the gold standard, like old school gold standard.
Old school standard. They say, look, renminbi will be convertible into gold.
On demand.
On demand. That would be a hell of a...
That would be very powerful.
Powerful.
And in that case, US dollar, hold on to your pants.
Forget him.
Forget him, like literally, you're gone.
Forget him. You got to watch this. This is a very important, important possible trend that could have a big impact globally.
Do you see any Western country maybe going back into that? Maybe, I don't know, the Swiss, because they were the last ones to hold on to it.
The Swiss might. But the whole, I don't know whether you read the book, The Creature from Jekyll Island.
I've heard of it. I have not had the pleasure.
About the formation of the Fed and the plan by global bankers to unify the world into one system and so forth. And of course, at Bretton Woods, they eliminated basically the gold standard.
Yeah, they had the fake gold standard, and then Nixon destroyed the last little link to it in '71. Yeah.
And if you look at the history, any country that adopted the gold standard had a very stable environment with low inflation.
Which is basically the U.S. up until the Fed, up until just before World War I.
Yeah, because the thing with gold standard is it takes the power away from politicians.
Exactly. They can't print their way. They can't print their way to pay for a war or welfare.
At the end of the day, inflation and money devaluation is a big tax.
Of course. It's a hidden tax on everyone.
It's a hidden tax on everyone.
Yeah. And even the strongest currencies can be destroyed. Like even going back to the issue on Venezuela, like I don't know if you remember, but back in the 60s, the Bolivar was out there. It was like literally on par with the franc and the dollar.
Exactly.
Many people even held it as a reserve currency. I will admit never to the same extent as the US dollar, but at least in Latin America, it was the regional go-to currency.
Exactly.
And right now the Bolivar is a joke.
Yeah.
It's non-existent basically.
And before that, the Spanish silver dollar
Yes, of
was
course.
used all over in China. The silver dollar was used.
So would you say that ultimately, when you look at the outlook of gold, would you say gold versus Bitcoin coming into the future? Can Bitcoin really rival the US dollar in terms of the alternative to protect yourself from inflation? Or do you think gold will ultimately prevail because of these thousands of years of precedence that we have?
I personally think gold will be the best route. But if you talk to any young person, he thinks that the Bitcoin will be the answer. But I can't get my head around Bitcoin. I mean, when I go into detail, there's so many hidden aspects of the Bitcoin creation and sustainability that you wonder, how can this continue? And I'm afraid that AI may have an impact.
Okay.
Somebody will figure out how to break that code.
The blockchain, and ultimately
the blockchain, that could be a real problem.
All right. Now, zooming in more on like just practical advice for the young guys out there who maybe want to start investing. Let's say, I know it's sometimes very dangerous to oversimplify, but if you had to maybe pick your top 3 or top 5 emerging markets that you're watching right now, for that person who says, listen, I'm comfortable with the S&P 500 for like 80% of my money, that's fine, but I want to take this 20% and I want to go out there and follow the steps of the Indiana Jones of the investment world. Which markets would those be?
Well, as I mentioned, the U.S. still is the giant, okay? And it's good that they have the largest portion in the U.S. But then I would next look at China, particularly now with changes taking place, and India. Maybe from a longer term point of view, India is going to be more important. Because as I mentioned, you've got a young population, 1.2 billion people, and the Indian government is changing a lot of the regulations to make things easier for business. So that's going to have a big, big impact. Besides, the Indians are, big segment of the population, English speaking, well educated. You have to go to Silicon Valley, you find out half the companies are run by Indians.
Yeah. And all the engineers are Indian.
Yeah, exactly. So I think at the end of the day, you got to look at India.
Okay, China, India. Do we have any candidates in Africa or Latin America? Maybe Argentina with Malay? No, not large enough?
You got to look at Asia. Africa will eventually come out, but it'll take time. But I think the next step would be in Asia would be Taiwan.
Okay.
Despite the threats from China, Taiwan is still a dynamo, and Vietnam.
Vietnam. Okay, interesting.
Vietnam, very, very, very dynamic economy.
So your big play is mainly Asia. Africa will take some time, and Latin America, maybe not too interesting for the moment?
Not interesting yet, but there'll be something in Brazil, some things in Mexico, and unfortunately we missed the boat in Argentina. Argentina has gone through the roof, so it's become a little bit too expensive at this stage.
Okay, it was interesting maybe right before Malay
exactly.
got in there. We have to wait and see if Javier Malay actually stabilizes it.
Yeah, exactly.
Because you've been talking about like pegging the peso to the dollar, which I mean is not gold, but it's already a start, and certain things that might be interesting down there. Okay, perfect. So I think this was fantastic. Any final words for any young investors out there that you want to just general advice to all of you? Want to step?
General advice: be optimistic.
Be optimistic. I like that.
Why? Because at the end of the day, if you can just put your money into the S&P 500 and sit back for the next 10 years, it'll go up. Eventually there'll be ups and downs, but at the end of the day, it'll go up.
Just hold your breath and go.
And hang on.
All right, do that and buy gold.
Buy gold.
Buy gold. All right, that was the Indiana Jones of the investment world, ladies and gentlemen. Thank you so much for joining us, and thank you.
Thank you.